Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria and I would be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns in Nifty, Bank Nifty, global indices and different asset classes. So let us immediately go to the charts and we'll try to figure out what could be the trend for the next week. So let us first of all go to the India VIX chart. In India VIX charts, you can clearly see that the VIX has been moving into a triangle formation since December 2021. It has been moving in that particular trend with overlapping in this particular triangular formation. Now here multiple resistance have been seen, and this time also, I mean to say almost third to fourth times, it has tested the level of 22, and from there it has shown some sort of weakness at those levels. Weakness in India VIX, which clearly indicates there could be a bullish trend in the markets. Now we have seen that it is India VIX is quoting around 19.96, and if we take a conservative level or support area, then this lower super trend line could act as the immediate area where VIX can take a pause. So almost from these levels, the potential of VIX is 16.2 to 16. So if India VIX drifts from these levels from 19.96 almost 20 to 16, then Indian markets might shoot up very sharply in a very short period of time. So this is just an indication. Now let us go to the CBOE VIX, which is the volatility index of US markets. Now there also you will see that it has been moving in that particular trend, and since January 2022 it has been moving in that particular direction. It has almost always failed to cross its previous high, and multiple times it has tested those resistance area, maybe 7 to 8 times. Again it has tested 34 and tried and showing some sort of exhaustion at these levels. Now you can see when there is an exhaustion in CBOE VIX, you can see here was an exhaustion, here was an exhaustion, here was an exhaustion, and from there CBOE VIX has corrected. That means the US market has also rallied from this particular area. Now let us go to the charts of Dow Jones. So we will have a clear view that whenever VIX is exhausting, the Dow will give some sort of relief rally or a counter rally, what we say, from those oversold area. Now since last week also we have discussed regarding the global markets into oversold territory. It is going into deep oversold territory. Now you can see RSI is just at 27 when Dow Jones is making 52-week low. Now again let me go to the monthly chart of Dow so that we can make some uh, uh, trend line or area where we can find out there where is the potential area of the Dow where it can take a pause. Now you can see this is a horizontal line. This was the area it took resistance couple of times, 2 months, then it corrected. This was a fall of COVID-19. Then it rallied again, took resistance for 3 months. It consolidated, and then we have seen a massive rally from the breakout of 28,500. It rallied till almost 38,000 or 37,000. After that breakout, it has again given a pullback. Again, I am repeating, this is the resistance area. Now it has become a major support. Now, what I would like to just mention is that this the US market are also not into a bear market. This is just a time correction looking at this particular price pattern. CBOE VIX, the resistance has become support now. Now, I'm not saying that at this area it will make a bottom, but we are somewhere near to the bottom of the global market also. In Dow Jones also, we feel that much more downside is not seen from these levels. Yes, it might trade some slightly weak. It might consolidate at lower levels, and then we might see Dow rallying from the lower levels. So at these levels, going or having a bearish view, a very bearish view on the global markets, that is not at least advisable at this point of time. We might see a counter rally in Dow Jones also. The counter rally might be towards or might test the level of 30,580 in maybe next 4 to 6 weeks. So definitely we need to watch out for a particular pattern where we might see a confirmation in this wholesale territory that Dow Jones might give a rally from these levels. This could be a counter rally. Now let us go to the European markets. Now in European markets also we can see that it has entered into a deep oversold territory. RSI has entered the oversold territory and it is jumping from those levels. This is CAC. This is the index of France. You can clearly see oversold territory. It is trying to find out some sort of bounce back from this level. Again, I am saying that this is not the bottom, but we are somewhere near about bottom. Maybe it will take some time, 3 weeks, 4 weeks, or 2 weeks. I don't know the exact time it will take because price needs some sort of time to consolidate at to lower levels. So we might be just near about the bottom. Now let us see the DAX. This is the German index. Again, in DAX also, it is a similar kind of pattern. You can see it is into oversold territory. RSI is also bouncing from the support, and maximum times you can see this RSI whenever it has tested those levels, the markets have bounced. I mean to say the German market have bounced from those levels. So now uh, let us go to the FTSE. The FTSE markets are also showing same kind of pattern. It is also into a time correction. Here it is into oversold territory. Here also you can see RSI multiple times taking support and it has rallied. When RSI is rallied, the market has also rallied. Now, as I said, that uh, FTSE markets also might see maybe 100 or 200 points or 300 points downside from these levels. But as I said that, let me put the indicator. But as I said that we are just near about the bottom in the global markets, and the confirmation of that is the CBOE wicks, the India wicks, which is clearly indicating that global markets might rally, might see a counter rally from these levels. So one need to be cautious while going short into Indian markets. So, and again, one should not be too much bearish on the global markets. That's what I can say at this point of time. And as and when the price develops, price will show some sort of reversal. We will definitely indicate you on our video or through our channel. So now let us come to our Indian markets. Let us discuss Nifty first. Nifty was also into slightly oversold territory. Now it has been making low tops, low bottoms. Now, the most probable pattern which Nifty has formed is this particular uh, what we call as a channel, a falling channel. Let me make it a little clear so that now this is the falling channel. RSI has taken a support around this 28 mark and then it is rising. Yet it has failed to give a breakout. But the most important thing is this is the engulfing bullish pattern of Nifty on the daily charts of Friday. It has engulfed the last previous 2 days of the Friday. I mean to say engulfed Wednesdays and Thursday move. So it is clearly indicating that Bank Nifty is poised for a upside rally or a counter rally from this level. But looking at to the global markets, I mean to say the Dow on Monday, Nifty might open slightly negative, maybe 100 points, 125 points, but that should be used as a buying opportunity. But we should again wait for this breakout from this channel to give a confirmed view or to have a confirmed view that Nifty again might test the level of 18,000. On the contrary, the primary trend from these levels is already bullish, so we are still uh, uh, intact, or we are having a view that Nifty has potential to test the levels of 18,100 and has the potential to test maybe 18,600, which is all-time high, maybe during December or the year end, the calendar year end. So we are just trying to just wait Nifty to break these levels of this channel breakout. But as of now, looking at this pattern, we feel that any dips should be used as a buying opportunity. Now let us go to the Bank Nifty chart. In Bank Nifty charts, also a similar kind of pattern has been formed. Let me draw a parallel channel so that we can figure out what kind of a trend has been formed on the Bank Nifty. Now you can see in Bank Nifty also this is an engulfing bullish pattern. It has angled Wednesdays and Thursdays move and it has given a very strong bullish candle, which clearly indicates that Bank Nifty is also poised for an upside rally from these levels. But again, as I said, the Dow Jones has given a negative close, so we might see maybe a weak opening. Maybe if there is a negative opening of maybe 300 points. Currently, Bank Nifty is quoting around 38,631. If it opens around maybe 38,350, 38,360 odd levels, that should be used as a buying opportunity from that particular level. So index are looking bullish at these levels. So looking at this particular pattern, we feel any dips should be used as a buying opportunity. So now let us discuss the important supports and resistance level in Nifty for the next week. So the first support in the Nifty is placed around 16,929. Second support in the Nifty is placed around 16,747. Third support in Nifty is placed around 16,641. These are the important supports in the Nifty. On the upside, the resistance in the Nifty is 17,196. Second resistance is around 17,327. And third resistance in the Nifty is around 17,532. So these are the important supports and resistance level in the Nifty. So now let us discuss what are the supports and resistance level in Bank Nifty. So the first level, support level in the Bank Nifty is placed around 38,283. Second support in the Bank Nifty is placed around 37,843. Third support in the Bank Nifty is placed around 37,386. On the upside, the first resistance is placed around 39,050. Then second resistance is placed around 39,220. And third resistance is around 39,546. So these are the important supports and resistance level in Bank Nifty. Traders are suggested to follow these levels and have a view of buy on dips. So now let us go to the third segment of our show, which is option analysis. In option analysis, we'll try to figure out what we have observed in Nifty calls and put, Bank Nifty calls and puts, and looking at the option data. So now let us discuss what we have observed in Nifty calls. In Nifty calls, you will see on the screen the action was seen in 17,200 calls, 17,300 calls, 400 calls, and 17,500 calls. Now here you can see there has been a rise in the open interest. There has been rise in the volumes. Again, due to the Friday's rally, we have seen there has been rise in the option premium also. The implied volatility is between 14.49 to 14.91, which is indicating that the smart money had started buying out of the money calls, which clearly indicates that Nifty has potential to test the level 70,500 on the upside in the next week. So now let us go to Nifty puts and we will try to figure out what we have observed on that data. In Nifty puts, the action was seen in 17,000 puts, then 16,900 puts, 16,800 puts, and 16,700 puts. Now here you can see there has been rise in the open interest, rise in the volumes, Implied volatility is also rising between 18.52 to 19.74, and there has been a significant drop in the option premiums, which clearly indicates from here that the smart money had started writing out of the money puts, which indicates that from these levels 16,700 could act as a major support area, and Nifty might not uh, fall below 16,700 area. So looking at this data, we feel that there is a strong support at the lower levels. Nifty is also poised for an upside rally or a counter rally from these levels. The strategy should be buy on dips. Now let us go to the Bank Nifty option data. In Bank Nifty call option, the action was seen in 38,600 calls, then 39,000 calls, then 39,500 calls. Now here you can see there has been rise in the open interest. There has been a shedding in the open interest also, rise in the volumes. Option premium are also rising. Implied volatility is shooting up, which clearly indicates that this might be the short covering. Those who have done call writing uh, during the expiry week. Now here you can see in 39,000 there has been a shedding in the open interest. Shedding in open interest means those who have done call writing of 39,000, they have started cutting their positions. I mean to say booking their profits, which is again pulling back Bank Nifty on the upside. So definitely, it clearly indicates that writers are now trying to cut their short positions in Bank Nifty calls, out of the money calls, which they have done writing, and which will again take Bank Nifty higher side from these levels. So any dips should be used as a buying opportunity from these levels. Now let us go to the Bank Nifty put. In Bank Nifty puts, you will see the action was seen in 38,500 puts, then 38,000 puts, and 37,500 puts. Now here you can see there's rise in the open interest, rise in the volumes, significant drop in the option premium, and the implied volatility is into the danger zone. It is between 22.93 to 27. So here also we can see that the smart money have done or might have done uh, put writing. So on the downside, we feel that 37,500 could act as a strong support area from these levels. So any dips from these levels should be used as a buying opportunity, because any dips might bring in support in the Bank Nifty, because this kind of put writing is clearly indicating that both the indices are poised for a very sharp rally from these levels. So looking at the global markets, Indian markets, option data, candles, we feel that the markets might remain bullish for the next week. Any dips should be used as a buying opportunity. So now let us come to the final segment of our show, which is positional call. I've identified the stock. The stock is HDFC Bank. This is the first time in the last couple of months that I have selected a stock from from the from the blue chip companies. You can see the charts. It has been moving into a rising channel. HDFC Bank. RSI was into oversold territory. It has taken support around this lower channel support trend line. You can see the engulfing bullish pattern. It has tried to engulf the last 3 days prior to Friday downfall. It has almost pierced uh, Tuesday's candle. So definitely it is indicating that some sort of strong buying has been seen in the HDFC Bank counter. So any dips should be used as a buying opportunity for short to medium term investment. Those who want to take a investment call for next 3 to 4 months can accumulate HDFC Bank from these levels. The current market price of the stock is 1421. One should buy on dips around 1400 for an upside target of 1600 in HDFC Bank. a short to medium term investment of next maybe 3 to 4 months, 5 months from here. This should be the stock, or the investor should start buying this stock for even long term investment, because the potential of the stock is much bigger from these levels. Even it can test the levels of 1700, those who want to take a call for an investment of more than 12 months. So most probably short-term investors can buy the stock on dips to 1400 for an upside target of 1600 for next 3 to 4 months. Sorry for the disturbance in the video. Thank you very much, friends, for watching the show, and have a nice trading week. Thank you.